Hi everyone, welcome to the Real Estate Tax Tips channel. My name is Cherry Chen, a chartered professional accountant located in Oakville, Ontario, Canada. And I'm on a mission to become the Google map for hardworking Canadians seeking financial freedom. Today, I have an extremely special guest here with me. I'm super excited. I'm always very nerdy about these tax stuff. And so I get really excited when I have a guest that come in to talk about tax with me. I know a lot of you may not be interested in talking about tax, but this is something that we specialize in doing. So I wanted to bring the best of the best onto our show to share with you the latest tax dispute and latest tax change. So today I have a tax lawyer, Dean Blachford from Blachford Tax Law Firm, and he's going to talk to us a lot about these house flipping tax case that he's been on. So welcome, Dean.
Thank you so much for having me, Cherry.
Yeah, so do you mind if you introduce yourself a little bit and what you do and what you specialize in doing so then we understand where you're coming in from?
Definitely. So I'm
Yeah.
a lawyer who specializes exclusively in helping people who are resolving in the middle of tax disputes with CRA. So we're talking like large $100,000, $1 million tax disputes with CRA. And that's what we're
Mm.
doing every day. And this can happen to a lot of people think that like, oh, this wouldn't happen to me, this would happen to me, but that's what all of our clients thought before it happened to them. So this happens to regular people, regular business owners, or regular real estate purchasers, and we're helping them every day.
Wow. So that's why I get excited because then I love to hear stories. I'm just nosy about all these that are happening because for a very long time, I've been reading court cases, but court cases, I know that is many level up. In between getting your first audit letter request from CRA to the court case, it's a like there are many steps before we get to the court case and it has something being written on it to get to me. So I know there are a lot of stories in between, and it may never make it to the court to begin with. So based on what you do, what are you seeing on the market right now? And what do you do the most frequently in your practice?
Yeah, so it's a good point what you're saying about there's being so many cases that don't get to court because we're trying to absolutely avoid that for our clients. If they're going
Mhm.
to court, there's so much risk, there's so much cost, there's immense amount of stress. So you typically have three steps in a dispute. You have an audit, you have an
Mhm.
objection where after you get audited, CRA says, okay, you owe this hundred thousands of dollars or $1 million on
Yeah.
this property flip. You have an objection where you file an objection. You have to do that on time. Don't miss your deadlines. And you get a different person from CRA. They're supposed to be independent and they review your file. And then
Mm.
if you don't resolve it with them, then you're going to tax court. So we're trying to resolve it either at the audit stage or that objection stage and trying to save our clients the pain of going through the tax litigation process. We do that. We go to court if we need to, but we're trying to avoid that for our clients. And on the property flipping side, so we're seeing a lot of this is a huge thing for CRA, right? Between
Mm.
2015 and 2023, CRA has published that they made $1.4 billion off real estate audits. It's a
Mhm.
cash cow for CRA, and property flipping is a big one. So these happen in a few different ways. You'll often have often it'll be a real estate agent or a contractor who will buy a property, fix it up, make it more, do some like either light finishing stuff or more substantial, take down the wall, make it open concept, like this type of thing. And then they'll sell it at a big profit. And they're making
Mhm.
money often off their own labor and off the increase in the market that, when the market was going up dramatically. And the person makes that money, and then CRA comes back and says, well, even though you lived in it while you did those changes, you're not entitled to the principal residence exemption because we think that you did that. You purchased the property with the intention of making a profit, and therefore you're going to get taxed on that. So, taxed on 100% of the gain, not 50% of the gain. And often, people won't have receipts to show the work that they did, so they end up not being able to deduct anything against that gain, and then gross negligence penalties can come in. And so that's how these assessments get so big. And as you and I have talked about, it's often not the first time you do one of these that you get audited. It might be the second one or the third one. And then CRA goes back and audits you for all three properties that you've done. And that's how we get the multi-million-dollar assessments. So that's one kind. But there's a couple other. Can I tell you about a couple others as well?
Yeah, absolutely.
Okay,
Tell
so
me.
another one that I'm seeing is, people like having done infill properties where
Mm,
they bought a property, tore it down, and then rebuilt a whole new property, and then they're selling those, in the Toronto market for many millions of dollars, and
yep.
CRA is coming back on them, and so they're getting hit with the tax on the gain, income tax on that gain, but they're also getting hit on the HST on that gain as
Mm,
well, because now that's considered a new build property. So you have to have collected HST, can't go back to the buyer and tell them, oh, actually, now you needed to have paid HST. So these people are coming to me having gotten hit with, millions of dollars in combined HST on the sale, income tax on the difference between what they purchased it for and what they sold it for, and then often penalties as well.
wow, yes, we've been trying. I mean, I try my best to do as much education as possible. Like when you do infill projects or even like building a rental property, purpose-built rental property, people often do not understand that, hey, like there is a HST implication. And they are often super shocked to find out that what? I have to pay like this much to CRA just because I built new rental housing.
Right.
So they are shocked to find out that they have to do a self-assessment, and then obviously the infill project as well. You mentioned that there's a couple others. What else?
Yeah, so sometimes we'll see like the more smaller ones, or you might buy a condo when it's developing. You buy
Mm,
it pre-construction, the value goes up, and you sell it either without living in it or living it for a
mm,
really short period of time. CRA has data on all that, and they come and say, hey, you made this gain, you made this nice profit. Maybe you didn't do any work on it, but you just made profit by the fact that you got in so early. We think that was your intention all the while, and therefore we're going to again tax you on that profit and HST as well.
yeah, absolutely. Like I think that is the most audited area, right? The most the highest ROI for CRA. Let's just put it that way,
That's right.
especially in Ontario, because the HST rebate, if you did not move in but you claim that you move in, is $24,000 or
Yeah, yeah,
$26,000.
somewhere in there.
$24,000. It is a lot of money, and it's easy grab from CRA. Now, I guess my question to you is I always have this same question too. It is specific, case specific, but generally, what are the guidance that CRA uses to determine if a property sale is considered flipping?
Yeah,
And as we mentioned earlier, if it is considered flipping, then the sale of the profit, the profit resulted from the sale of the property would be 100% taxable, not 50% taxable as of now. Obviously, it's getting changed
yeah, right,
by June 25th. But as of now, it's not 50% taxable. So 100% of it is taxable. And how does CRA decide whether you are, or make the conclusion that you are flipping
yeah.
and you're not doing the long-term buy and hold, long-term investment type of strategy?
Exactly. Okay, so what we're first off, that 100%, what is so hard for taxpayers is that 100% gets added on in 1 year, right? And it goes on
Mhm.
top of your normal employment income. So if you made a profit of whatever $200,000, and then it adds on to your say $100,000 a year employment income, you're getting taxed on that 200 in really high tax brackets. So that's part of the reason why it's so punitive, in addition to penalties and interest, et cetera, et cetera. But your question is a great one. What is a flip, and then how does CRA determine what is a flip and what isn't a flip? So we're talking here comparing someone who's buying a property to live in it as their personal residence, in which case there's no tax on the gain because of the
Mhm.
principal residence exemption, versus a flip. And what that comes down to is your intention at the time of purchasing the property. So CRA, and in a worst case scenario, a judge essentially puts themselves into your mind on the day that you're purchasing, and they're saying, what was your intention? And if they decide that your intention was to sell it for a profit, not to live in it with your family long term, if they decide that your either your primary or even your secondary intention was to sell it for a profit, then boom, you're taxed on that gain for all the ways that we've discussed. And so that's a very invasive feeling, right? CRA coming
Yeah.
into your brain. And then on top of that, they get to make assumptions. So once CRA convinces themselves that your intention was to flip it, the burden is on you to prove that you didn't. So you're having to prove a negative. You're having to prove, oh, I didn't think about the profit, or at least not that I didn't think about it, but that it wasn't what drove me to make this purchase. And so there's a lot of factors, and I've actually got a white paper on this if anyone wants to read all of them. There's about like kind of 15 factors that I've pulled out of different cases that are relevant. But if CRA, so I'll give you a few. So the main one is the length of time. Now, it doesn't it's not just 1 year. It's not like, oh, I got to 366 days, now I can sell this no problem. No, that a lot of people believe that, and there's new legislation that I think kind of complicates that and feeds that misconception. And real estate agents, a lot of them think that, but that's not the case. There's no bright line rule that says, oh, once I get past this day, then I can sell it no problem. Again, it's your intention at the time of your purchase, but obviously the longer you stay in that house, the more the safer you are. So that's one of them. History of this, we've talked about, like CRA catching you on the third one. Now they can catch you on the first one. They are entitled to say, no, even though this is your first time, we still think this is a flip. But obviously, if they can show a pattern of this, then again, your risk is going up of CRA being successful in their assessment of you.
May I stop you to clarify that
Please.
point? So when you talk about 2 or 3 transactions, we're talking about like, hey, like you move into one, you claim that you move into one, you sell it and not pay the tax. You report it properly. This is my primary residence. We don't pay the tax, and I dispose it. And then you move into a second one and stay just really for a short period of time as well, maybe longer than a year, but it's still relatively short. And then you sell it and report it as your primary residence again, and then you do it again in a short period of time. And the risk is that the CRA is going to come in on the second or the third transaction and look at the previous transactions that happened to challenge you, because, hey, because you are constantly doing it, the number of transactions that you've been doing, it's more likely for them to convince, even if they ever need to go to the court, that, hey, you are now flipping. Your intention is always to make a quick profit.
That's
Is that
exactly right.
right?
Right. That's exactly right. So whether you move into it or not, right? Like you can still be assessed as flipping, even if you're moving, like you said, even if you get past like a year, if they're seeing a pattern. And often what we're seeing people do is they're kind of like living off that profit. So
Mm,
they're flipping, and that it's almost like, okay, that seems to be it's looking that's like your primary source of income.
yeah.
You're a contractor, but a lot of your income seems to come from continuously
Oh,
selling houses. Or we see people kind of leveling up, right? So there's like every 2 years they're flipping, they make a profit, they buy a house that's slightly nicer, they do the same thing, they buy a house that's slightly nicer. And you'll see, and this leads to another one, you'll see sometimes we'll see circumstances in which the taxpayer actually can't afford to live in that house unless they sell it, right? So they'll be so leveraged. And this is one of the things where CRA will definitely look into when it comes to like these factors that we're talking about. So CRA will want to know why you sold it. And if there's a death in the family, if you got divorced, if you lost your job, these things are really clear and obvious reasons why you might have to, if you move to a different city, right? That becomes obvious. If you can explain to CRA, hopefully we're going to resolve that one quicker. But if you're coming with like, oh, I built this house and then I realized I can't afford it, CRA is going to say, well, shouldn't you have known that at the beginning? And it's now looking like you knew you needed to sell it, and what you're really going for is you're leveraging yourself hard. You're doing this beautiful project, you're selling it, and now you're living off that income. And so that's definitely like a red flag for CRA.
wow. So, okay. So if you have a client that comes to you and say, hey, like CRA caught up to me and I've done this, I'm a contractor and I did live in the property for a few months and then I sold it. I do have my addresses there. And then what? Like, what can you do?
Yeah. So I mean, first off, there's nothing wrong with flipping, right? There's nothing wrong with property flipping. The concern is that you're going to report it with this principal residence exemption, and then you're going to get caught. So if you're at the beginning and you're thinking about maybe doing this, again, it's not, property flipping is not illegal. You just, in your budget, in your plan for this, you need to budget a line for tax, and you need to make sure you talk to Cherry in advance. So you think about HST and all these different factors. So that's one thing I should say. The other thing, so if CRA has kind of caught you after you've done this, I mean, most people are coming to me and saying, hey, I actually didn't, I wasn't planning on doing this. We had to sell for faster than we thought, or et cetera. So there's a lot of circumstances in which it might look like a flip. People are coming to me and they're telling me their story, and it's actually not a flip. And then I'm working with them to convince CRA, either the auditor or the appeals officer, that in a worst case scenario, Department of Justice lawyer, no, this actually wasn't a flip. And that happens a lot, right? Because whenever CRA is focused on something, they've got this one industry in their crosshairs, there's going to be a bunch of innocent people that get swept into it. And so that's happening all the time. And we've been very successful for a lot of clients for that. With that one, I would note that one of the ways that CRA gets started with these is they have a template, questionnaire. If you get one of those questionnaires, I'm sure you've seen it, like multiple questions, we're talking like 30 to 40 questions. If you get one of those, I would, and you think that there's any chance that you're at kind of risk at this, and you think your circumstances could fit into this kind of potential risky scenario, I would be getting help right away. Because when I work with clients on those questionnaires, there's never been like one circumstance where the client fills it out, sends it to me, and says, I'm about to send this to CRA, and I've read the whole thing and said, like, oh yeah, we don't need to make any changes. Whenever, and it's not because we're ever lying on those questionnaires, right? You always have to tell the truth. But people's brains around these things, it's this personal thing. It happened a few years ago. As soon as you start prodding and poking and asking questions, and I kind of put myself in the place of the cross-examiner, and I almost like cross-examine them on their own questions, you see the answers changing. You think, oh no, I remember this. And then I'll say, okay, well, maybe you should talk to your wife about that. And oh yeah, my wife reminded me of this. And oh yeah, then I found this email, and that email reminded me of this. So these things always change. The facts at the beginning are so important. And so that questionnaire, don't just fill that out willy-nilly. That's a really important thing. And if we end up having to go to tax court in the worst case scenario, they will look at that questionnaire. That questionnaire will be presented to the judge, and they'll say, hey, you started here with your answers, and now you're telling us something very different. Now your credibility is in question. Now our case gets weakened. So that's one comment I wanted to make. If someone was coming to me and said, I did this and I got caught, that doesn't tend to happen a lot. But then we would get into a different kind of strategic situation. I might have to talk to you about that, about how we factor that in. But most of the time, it's people coming to me saying, or like, maybe I did it on this one, but I didn't do it on my last one. That certainly happens. CRA might see one that was a flip, and then they go back farther, and you get kind of swept up into something that is bigger. It's rare. It's usually bigger. CRA has made it bigger than it should be. I would say that.
Oh, 100%. They are targeting real estate industry, right? So that's where I think of maybe 10, 15 years ago, they did that study that did the random audit versus targeted audit, and the ROI on the targeted audit is a lot higher than the random audit. And that's why, like, hey, here we are. Every year they update their website to tell us how much money they've recovered from the real estate industry for a reason, right?
That's right. It's a cash cow.
Yeah, exactly. Just like you said. So you mentioned these process of going through the dispute. If you get a letter from CRA starting the audit, you need to engage with a professional. And I guess one of the questions that our clients or our audience would want to know is, hey, what's the difference between working with an accountant versus working with a tax lawyer? And I know there is difference, and there are times that we recommend our clients to go to a tax lawyer because they get more protection. So would you mind explaining a little bit, elaborating a little bit on that?
Yeah, for sure. So I would say about 90% of our clients are coming from accountants. So accountants are referring us the work. And that's because accountants, accountants, this, they need to know so much these days. Like they need to know so much about so many things. It can't be possible that they know all that stuff about those things and then they also have this expertise on this narrow issue. So us at Blachford Tax Law, we're very, very niche. We do tax disputes 100%. That's it. We're not doing tax planning. We're not doing incorporation. We are just disputing CRA, representing business owners and real estate investors or real estate purchasers 100% of the time. So that it's just a specialization thing. So I would say like if you're getting anything close to a questionnaire or and we do focus on larger audits. So we don't even really do like the rebate at 24,000. We don't do that dispute because we need to be focused on the big ones because that's where people need us most. So if you're getting a questionnaire, if there's a hint of any sort of flip, I would be reaching out to us, ask your or telling your accountant to reach out to us right away because this is just too important to only have a generalist on board with this. So that's one thing. The other thing is just solicitor-client privilege. So accountants don't have solicitor-client privilege. We do. That just helps you out being when we're talking about something like this that's so factual. It's nice for you to be able to kind of tell us everything, and then we help you go through that and help you kind of like tell an accurate and true and correct story, but tell it knowing that like nothing you say to us can be accessed by CRA or because again, accountants just don't have that solicitor client privilege.
Yeah, like I think it's a great point because I sometimes doubt the clients tell us something, I'm just like, I didn't hear it at all. Not that we intentionally do
Yeah.
anything wrong. It's just that sometimes I recognize that accountants are accountants and we don't have that privilege. What that privilege does is that if CRA there could be secrets between us essentially,
Yeah.
but we don't have that. Whatever CI asks me, I have to disclose what I know and as an accountant. But between you and your client, you would have that privilege. You can keep it for reasonable ground. It's not for everything, but for reasonable ground, you would be able to keep that story between you and your client. But there's nothing like that under the law to protect the relationship between the accountant and also the client.
That's correct. That's right.
Yeah. Wow, that is a lot of information here. Now, I want to talk a little bit about and this with like a story. Have you had some like crazy story client? What are you seeing on the street that are like really interesting? What's the most ridiculous evidence that you need to present to CRA to convince the CRA agent that they are wrong?
Yeah, sure. So I've got lots of stories of that, but I'll try and narrow it. So I would say that this property flipping is such a unique and kind of interesting type of dispute because we have some disputes that are restaurant audits or tax planning audits or HST audits that are really technical. They're about the numbers, they're about the evidence, and they're all about the evidence. But you're dealing with a lot of spreadsheets. Property flipping, the numbers are on the side. You know what the numbers are. You know where this is what you bought it for. This is what you sold it for. The numbers part of it is really easy. What it's really about is it's about your story. It's a narrative. It's about your life. It's about your personal circumstances, your partner, your children, etc. So when I'm asking these questions, I'm doing these interviews and finding out this really kind of personal information about my clients and having to then tell this story that explains to CRA what actually was motivating, what was inside my client's brain at the time of purchasing. So, one example was I got this client late and they had already gone through the audit and they had been represented in maybe not the best way by not someone who wasn't a specialist. And so now we're at the tax court stage. So I'm filing a notice of appeal and I'm getting to know the client. I'm doing this initial interview, and it turns out like so he had bought a property, he had torn it down, he had rebuilt this property. He's in the construction industry, so again, CRA is very suspicious right off the bat. And he had to sell this thing quickly, and so a lot of red flags. Fast, all these things. But after interviewing him, just even in the first time, I found out a couple things. One was that in one of the rooms of this house that he had sold after like 6 months, in one of the rooms of this house, he had gotten someone to paint this beautiful mural for his daughter. and it was really specialized, and it was about, the princesses she liked at the time, and it was totally tailored to him. So he's got this mural, and I've got these photos. They're not of the mural, but they're of his daughter, and she's in front of the mural. And so I've got that.
Oh,
Yeah, yeah. And then the other thing was that, again, this hadn't been in any of the correspondence to CRA, but the property was on the same street as his grandmother. His grandmother was down the road. So,
oh,
like,
okay.
I don't know how it got that far, and nobody had said, "Hey, hold on a second. You're claiming this person flipped this property when they've got this put in this mural that would, is not going to help your resale value, putting in a mural that's a picture of princesses on one of the walls." And oh, by the way, his grandmother is down the street, and why he's really buying this property, even though, the property became too big, and in the end he wasn't able to afford it. But he did it because he had this dream of being able to live near his grandmother, take care of her in her elder years, etc. So it's so funny, right? We're talking about, like, in that case, close to $1 million worth of tax, HST
Wow.
penalties, all that added in. And here the winning the case comes down to showing a photo of the daughter in front of a mural, and, like, showing that the grandmother's down the street. So it's kind of bizarre, but that's the type of stuff that matters in these tax cases.
That's crazy. And he ended up winning the case,
Oh
right?
yeah. Yeah,
Oh,
100%.
that's amazing. That's
Yeah.
like really good cross-examination questions that
Yeah,
you got
exactly.
there.
That's right. That's
Yeah,
right.
yeah,
Yeah.
that's very exciting. I like happy ending story. And
Yeah, that's
those
right.
are happy ending story. Thank you so much, Dean. You've given us so much insights, and I don't know how to summarize it easily. But if you are going through tax dispute, I know you are going to host a tax dispute webinar specifically coming up, right?
That's right. That's right. So we've got a couple of things. One, we have a quarterly newsletter. If any of this stuff is interesting to you, if you're an accountant or a professional advising taxpayers, or you're a business owner or a real estate investor, we have a quarterly newsletter that'll help keep you up to speed. I'll put this interview on the newsletter, the next edition. Another thing, though, is on January 18th, 2020, or sorry, June 18th, 2024, we are hosting a webinar that's designed for accountants, business owners, anyone investing in real estate as well, or making a real estate purchase. It's called "How to Avoid a Large CRA Audit," and it's going to be baseline information that's going to help you avoid mistakes, help you stay out of these things, because they're stressful, right? A CRA audit, it's up there with, like, getting a divorce and a death in the family. Like, this is one of the more stressful things that you will have to deal with in your life. So to the extent that you can avoid this or help one of your clients avoid that, that's a big deal. And that's why I'm so grateful for you, Cherry, for helping me spread the word on this.
Oh, that's amazing. Like this will be so good. I think I'm going to sign up. I haven't checked my calendar yet. So it's going to happen on June 18th online. It's going to be a webinar. What time would that be?
I We're gonna pin that down, and it'll depend on, Eastern
Yep.
and Pacific, but I'm gonna be able to get you the links for the show notes here, and I think we'll send out a recording too if people sign up and then aren't able to make it. So
Wow,
it's
that's
free.
amazing.
We're just trying to get this information out and make sure that everybody is alert to it.
Wow, that's awesome. Yeah, I'm looking forward to the webinar as well because I don't also want to get updated. I'm always learning. So it's nice to learn from a tax lawyer for a change. So thank you so much, Dean. For anyone who's currently in this type of situation, how do they contact you?
Yeah, so we're at blachfordtaxlaw.com. That's Blachford taxlaw.com. There's a contact form there, and there's a way to subscribe to our newsletter on the website as well.
Awesome. Thank you. Thank you so much for coming on. And really appreciate your time. And yeah, have a great rest of the evening.
Thanks so much. Thanks a lot, Sherry.
Thank you.
Bye now.